Okay, so what kind of situation do we have at the moment on Euro USD? Definitely an interesting pair to follow at the moment. Now, if you remember, we first said after the market had created this W formation, what did we say? We said we want to see Euro USD make this move to the downside, basically complete the W formation that, as you know, a W formation completes when the market goes back down and retests the neckline of the formation. So we said from here there is definitely the opportunity, since this is also the top of this range, to be looking for potential shorting opportunities. And then what did we say? After the market completes a W formation, what do you expect? The market to complete a W formation and to continue higher to basically complete this impulse correction and impulse pattern to the upside. So clearly, we know that we have resistance here, resistance here, resistance here, and this is the top of the range. And we know that we have support here, support here, support here, support here, and support here, which is the bottom of the range. And at the moment, we know that the market is completing the impulse correction and impulse pattern to the upside after having completed the W formation. So everything is going exactly as you expect. This is exactly how you expect the market to behave in this kind of situations. Now, the only question that there is at the moment is, will the market manage to break above the range, or will the market close back below today? Now, if the market will close below the range in today's trading day, so this daily candle here will close below the range, then we are not interested in Euro USD with students. But if the market will close above, there are two possible scenarios, which are definitely very interesting and what we will be speaking about today. But first, let's go and see what we have from a COT perspective on the euro. So let's go and get our COT data. So what hedge funds are doing at the moment in the market. Let's go and get our data for the euro and see how hedge funds are positioned. Now, from a euro perspective, what we can see is that we went from minus 114k net positions all the way up to 72k net positions. So from having shorts greatly outweighing the longs to having longs greatly outweighing shorts. In fact, at the moment, we can see that we have 167k longs and 95k shorts. So everything is indicating for possible continuation to the upside. However, guys, as you know, trading is reactive. Trading is not predictive. We can't predict the market, but we can know how we will be approaching the market, how we will be reacting according to different things that the market will do by using our strategies that need to be rule based. So, two scenarios that can present themselves on Euro USD. If the market will break above and continue to the upside, so confirming the break by creating an impulse that clearly breaks above the range, then, after that, what the market is supposed to be doing is giving us a nice retracement and retest of this range. Now, as you know, all this resistance will in that case be turned support. So we will have clearly previous resistance turn support at this area. We will have the possibility to create another impulse correction and impulse up an impulse pattern to the upside for more continuation and completion of another wave. And we will have the possibility, we will have the confluence of the Fibonacci taken from the low to the high of the impulse, which should be 50% or even better 0.618 Fibonacci confluence with this strong structure resistance, which will be then turned structure support, which was also the top of our range. And in that case, after the retracement, how we will be approaching this market with students, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside. On the other side, what could happen is that today's daily candle closes above, but the next one closes back below. Keep in mind, we set two scenarios, both if the market closes above. If today's daily candle will close below, we are not interested. But if today's daily candle closes above and the next one, so the day after tomorrow, the market closes back below, then this means that this a break to the upside was actually a fake breakout. And after a fake breakout, you expect a retest of the range and continuation to the downside. And in that case, how we will be approaching it, we will be monitoring price action from a 4-hour perspective on the retest of the range. And as soon as the market will satisfy our rules for short, we will definitely be shorting the pair to the bottom of the range with a very good risk to reward and good probabilities for the move to the downside. So we just have to see if this candle will close to the upside, which one of these two scenarios the market will give us. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.